Well, time for another silver update. And, as pointed out, I myself said, people were talking the line in the sand will be $18 a couple months ago. And I was never saying it was going to go that low. I said, I think it'll go below 26, maybe briefly. But as far as hitting 21, 20, 18, 15, no. I never said that, never believed that. But, I don't have a crystal ball. The one thing I don't like about the markets that was going on this summer is that they're so flat. They're just going along like they're on a desert, a desert plain. There's hardly, it's like 26 to low 28s, 26 and a half to low 28s. Now, of course, it's up, hitting around 31. But I don't trust this rally all the way. And I'm not saying I'm not bullish on silver. My main bet is physical silver also. And, I got so many ETFs and all that stuff. But it's, and I also think it's going to go up this year. But, when you have a rally like this, you had some serious gains over the last few weeks. And, boy, I sure wish I knew about that this was going to happen. I was clairvoyant or something. Because I would have went triple leverage. But you really don't know. I don't like it when markets stay very, very flat. That's not something cool because it's either going to go up or down. And I could have seen it going to 24, 25. Something could have done that. Right now, I can't even see that. But, I was never in the camp of like 21, 20, 18, 15, and that stuff. But I don't trust this rally, and I'm going to state a couple reasons why. Well, first off, just looking at a simple chart, silver's taken off all by itself today, And we say, well, that's because there's a shortage. Yeah, well, maybe there is. I don't know. Possibly. But, and, you could say I don't get into all the conspiracy stuff, but, I notice these guys, they come out with this stuff, and they get real brave about all the everything out there. It's like you got silver channels, you got silver stuff on the internet, blogs, newsletters. They gotta have stuff to write about. That's their whole forte. Silver and gold. So they gotta have stuff to write about, keep people interested in all this other bullshit. I'm just looking at reality. Because, if I could predict the price of silver, crap, I'd be filthy rich. Forget about just saving coins. You're gonna be breaking in on the markets too. But my plan is I want to look for a little bit of a pullback, and I want to state a couple reasons why. Now, looking at the markets today, oil's down, the Dow's down. Even the S&P's not on here. The S&P's down a little bit. Everything's down basically. Well, I guess palladium went up some, but silver's moving up. But I want you to look at what happened in the last few weeks when silver went up. Here's the base metals, right? Here's nickel. Look what happened here in the last half of August. Nickel rose, right? Along with silver, right? I know people ain't going to want to hear this stuff, but hey, I'm trying to keep this real. Lead, another base metal. I don't think lead and nickel are as good as investment of silver, but I'm pointing out they all rose, right? I'm going to state what the reason is. Copper rose, right? Same time period, copper rose. Zinc rose, right? And aluminum rose, which aluminum is in an abundant supply. It's like the biggest base metal out there. It's like it's and as a matter of fact, we got a way oversupply of aluminum, so they don't even expect long-term aluminum. There's going to be a very, very bad investment, unless you're going short on it or something like that. Even that rose during the time period that silver has been rising this last half of August. So what gives? You know what it is? In simple terms, it's expectation of QE. The same type of stuff that drove the metals up and everything up the first couple months in 2012, in January and February. That's the reality behind it. I'm sorry to tell people this stuff because, man, and not that I'm thinking that Ben Bernanke is going to do QE, but he's going to fake you out again, and that's maybe what the hell is going to happen here pretty soon. I think there's going to have to be a pullback in the markets generally, like the Dow and the S&P, some major hiccup in the euro. Not like everything's going to crash or nothing really bad, but enough that he's, like right now, they're thinking there's an 80% chance of QE. Now, if you knew this crap for sure, what he's going to do, you'd be filthy rich. So I'm trying to interject something as to what I think is going to happen, just using some street smarts or whatever you want to call it, if I have some of those. But here's something that's coming up that's like a change in tune. I remember just a week ago or so, they were talking about all this bad data, preliminary data coming out for the primary manufacturing index and all this type of stuff. And a number of things that were making people think QE is coming up. Now you got something else coming out today called the Dallas Federal Reserve Key Business Activity Index improved. In other words, the rate of decline in business in the Dallas area is not anywhere as bad as it was going on in July. So there's new data coming out. It's almost like, they talk about the traders in the Elliott waves. It's almost like, you got the yin and the yang. You got positive news and good news, right? Positive news and bad news, excuse me. And it's almost like you got to keep this in mind, almost like with the market sentiment too. What Mark Farber says, when the sentiment is high, you better exercise a hell of a lot of caution. When the sentiment is very low, maybe you can be braver then, but make sure you pick carefully. So what you got right now, the sentiment on silver is going up a lot now, recently. Just recently. Now silver, I think, should be $100 an ounce. I'm not saying that or everything because I think they are holding it back somehow, but I suspect that there's going to be another dip coming up here. And what it may be is something from Bernanke pushing off QE a little bit further. Not like it's going to be too much further, but a little bit further. The employment growth index improved in August 2012. The index rose to 14.2, and that's been the highest in 5 months. That was one of the key areas that Bernanke was worried about the most. So, what can I say? I mean, it's telling me that, he might not do QE. Yet, the sentiment right now, there's an 80%, they're saying, there's people saying, there's an 80% chance Bernanke's going to do QE. That's kind of like reminds me of what happened in the end of February. Everybody in the world was expecting him to say QE. Actually, I think he's going to do it, but he's going to throw you a curveball right before he does it. And it's not like him doing it, it's the markets doing it. Right now, the news is looking, from just a couple weeks ago, everything's looking bad with the markets. I mean, the general economy and stuff. And, the markets are still pretty high. Well, he's probably going to hold off a little bit on QE a little longer. So, that's really what's driving this rally right now. Expectation of QE. Look at aluminum. Aluminum's going up. Aluminum is an overabundance of supply. Why the hell is that going up? It's because people are freaking thinking about QE. So, I don't know. I'm just giving this advice more like if you're timing trades. I'd be very cautious about going long on any kind of leverage on the metals right now. I would wait for a pullback. Now, I want to give an example. Like you take, and I'm getting a little wiser on this stuff now. If you take, for instance, the first quarter of 2011, silver and gold and oil, everything was taking off like a rocket. Well, say for instance you got out of silver at $30 and you bought it at 20 or something, right? And you got out of it, say, January 1st, 2011. Just throwing the date out there. Well, if you got out of it, everybody be telling you it's going to 100, it's going to 100, it's going to 100, and here it's going up, 35, 40, it's going into 42, 45. You'll probably be kicking yourself in the ass. But we had this market correction and it jumped all the way back down to 33. So what I think might happen here, just throwing some roundabout numbers as a pretty much ballpark scenario. Hey, we might see silver go up to 33, 34, 35 right now. and then it might pull back below 30 due to something that happens in the markets. Problem with the euro, problem with the S&P. I don't know. It could be anything. It could be the 2012 Paralympics 9/9/2012 date. 11 years after 9/11/2001, right? You know, could be, right? You never know. I mean, something's gonna probably pull back these markets. That's the time you enter. And the only way you can enter in the market then is to be with fiat cash. So I'm just kind of giving out some trading advice on this because that's the kind of plan I'm pulling. I'm playing a little more patient with this stuff and not listening to, getting caught up in the hype, because I realize I get caught up in the hype too much too. And sometimes I'm really sensing that I should just shut off all these silver channels and just listen to like Mark Faber, Jim Rogers, and some of the mainstream, and I get better information. And some of the wisdom that you get out of like Mark Faber, Jim Rogers is very, very good to pay attention to, because, for instance, Jim Rogers will tell you he doesn't like the stocks as much as the underlying commodities, and I could see why, because an underlying commodity really ain't going to go down to oblivion. A stock could. I see that logic. I mean, the stocks can go explosive to the upside too, but if you pick the wrong one, you can get screwed on a stock big time. I mean, it can go down to 10% of its value. But for instance, could you imagine silver going from like $30 down to $3? No, not in a million years, right? But as far as silver miner, maybe, depends. For the most part, they're probably going to do great, but you'd have to really spread your bets out. Probably a very smart area to be. So, I personally like the underlying commodities too, but if you know how to pick stocks, you're probably a hell of a lot better off. Maybe you are better off with some of that stuff too. But some of the wisdom and advice, and caution flags that are thrown up there by Mark Faber and Jim Rogers and things like that are very important to listen to. A lot of these other people are just looking for money. The silver bloggers, the silver channels, they're only selling something. They're selling bullshit. They're not really placing. They're not in the markets themselves. The only thing they're doing is stacking coins, which is smart. I could say that's smart, but I don't understand what the point is of even having an update on silver if you're solely stacking coins too much. It doesn't make a lot of sense. But what I'd have to say, though, is if you see, I expect some kind of hiccup to be involved in this rally. And like I'm saying, I think, maybe it's going to go up 33, 34, 35. And you're going to see a hiccup. And if it drops down below 30, that may be the time to go in there on leverage. As a matter of fact, if I see silver going up to like 35, I might sell off my ETF position and stuff like that too, and some other things, if I start getting gains on the metals, and just sit back on cash and wait. Because something's going to, wait till they do a margin increase. I mean, maybe I could be missing a big bull run or something like that, but, wait till they do a margin increase. Then go in there hard. Because I think the trend is definitely up. It's definitely up. But you want to get in there on leverage when it hits a bottom, even if it's a temporary setback, right? And that's where you get your big gains. The problem is with the summer market, it was so flat that it's like you really don't want to do anything, because it's like hardly doing anything one way or the other. There's no volatility at all. And I also want to interject here a little bit at the end. I was listening to some of this stuff about, the oil projections, and actually I'm in double leverage oil, and that is taking a loss right now because there was no war with Iran. And as of right now, it looks like Obama is probably falling back from Romney now. Before it looked like he was going to win, but if he looks like he is not going to win the election, I would imagine that Israel is not going to attack Iran before the election, because If they attack Iran before the election, that's definitely going to put him in the presidency. I think they're going to attack Iran before the election if Obama looks like a clear winner, because they'd rather have this going rather than deal with Obama during his second term and try to get the war going. So, I've also noted that there was some, I'm not going to mention this guy's name, he's some bearded thing, it looks like, he got the beard like Bernanke and stuff like that. He's a big oil expert. He's a PhD, he's got glasses, he's got all these initials after his name. He was having a lot of people buy options. They were pumping emails out every place. I didn't buy options, I just bought double leverage because you can hold that stuff a long time. He had a lot of people buy options back in April of 2012 because he predicted oil to be up to $200 a barrel around the end of June. Well, I got news for people. Like, if you ever see a lot of that stuff being pumped out left and right, and they got all these predictions, I would never listen to these clowns in a million years, because if they know something, the whole game is fooling the other side. Why the hell are they even telling you in the first place, right? Why would they be telling you? And, I wasn't really paying much attention to him per se, but the logic behind an attack of Iran by the summertime did fit, and that's the way I bet. So right now I'm leaning towards, if Romney looks like a clear winner, they're not going to attack Iran until Romney's in office. That's what I think. But you know what? Anything can happen. Anything can happen, because if there's something happens with Iran, if they looks like they started, then it's going to happen. And a lot of this is related to the metals, because when oil takes off and there's tension in the Middle East, people run to gold. And I don't know what the hell the deal is, but when gold goes up and oil is in a hard bull run, silver takes off like crazy. So this war with Iran is probably what's going to make people wealthy with silver. There's no doubt about it. No doubt about it. So, I don't know. It's kind of a weird thing to actually look at, because you don't want a war, but then on the other side of it, you want your silver to go up. But that's reality, probably how it's going to work. A war with Iran is going to cause your silver to really make the big gains. And right now, if Romney is solidly ahead of Obama, and it looks like everything's changed from a few weeks ago or so, I doubt there's going to be a war beforehand, because if there's a war before the election, that would definitely put Obama in as president. If he's so far ahead, I'm repeating myself, sorry, but if he's so far ahead and it looks like he might be president anyway, Israel probably may jump the gun on it, because they want to have this war now and not have to deal with trying to start it with Iran when Obama would be in with his second term. So some of these factors are things to consider, and I don't think any other silver bloggers out there are telling you this stuff. So I just want to throw my angle in on this stuff, and that's just what I'm thinking of. Like I says, if I start seeing silver going up a lot, platinum, and I'm in the black, I'm probably going to sell off. I'll probably be selling them off. Maybe I'm selling them off too fast, but if these gains happen too quick, I'm going to sell them off, go to fiat cash, and wait. I'm not going to sell any physical, though.